All right, let's pick it up where we left off there, William. I know when you look at credit plays, comes to play in here, and
Yeah.
with the market being so hot, what are you seeing?
Well, just the most important thing is that I'd let people know the information on the credit reports because I'm helping the real estate and the mortgage industry with their clients to overcome some of these obstacles. But the consumer has to know that if the information does in fact belong to them, that's negative on the credit report or that's adversely affecting them, then that's where you come and utilize the benefits of the Fair Credit Reporting Act. Mm-hmm. If it doesn't belong to you, you got proof that it doesn't belong to you. I tell people file a police report. You don't have to come and pay for a credit repair. You can actually do the credit repair yourself. If you're a victim of identity theft, then just file a police report, send that information into the credit reporting agency. If it does belong to you, then that's when you want to use the Fair Credit Reporting Act and attack the information using the Fair Credit Reporting Act. And remember, we're going after the credit reporting agency for violation of due process. We're not going after the lenders because the information does in fact belong to you with the lender. We're going after the credit reporting agency who has missed steps in following this information according to the Fair Credit Reporting Act. So that's very important for people to know. I get people to ask me that question over and over again, and somehow or other it just doesn't sink in because I think we've been conditioned to say, pay your debts. And I do strongly encourage people, pay your debts if you do owe these debts.
Yeah.
But there are real debts and there are unreal debts. And I can show you how to make that distinction using the Fair Debt Collection Practices Act. That I allow myself to segue right into that. But the Fair Debt Collection Practices Act will be able to distinguish what debts are yours and what debts aren't yours, and then we can use the Fair Credit Reporting Act to remove the information from the credit report and then be able to have you challenge the debt from a legal platform, and 9 times out of 10, the collector will go away using the Fair Debt Collection Practices Act and the validation of debt process.
Right.
So it's just that I want consumers to be aware of this, and like I said, it's transparent. So we're not just telling you to send us the information and we send off to the credit reporting agency. We actually send the information prepared to the client. All they do is sign it, and then they keep copies for the record so they can see the laws that we're using and that we're not using the same laws over and over again like a lot of credit repair companies do. I just discovered that this week with a competitor that they were mailing the information out for the client, and they were just sending the same dispute out each and every time, and the client wasn't aware of that.
Mm. Yeah, that makes a lot of sense. I like your program because it's an educational process. You're teaching folks throughout the process, and I want to bring Diane into that conversation as well. Diane, when you look at credit and what William can do for clients, and then what the bank's lending criteria are, what are you seeing in that space? And I know at some point I think we opened up credit a little bit. They lowered some of the requirements recently.
Yep. Yeah. So for government loans, we're back down to 580. We are now. The banks are not. But as far as lenders that we don't have deposits and things like that, we are down to 580 for government loans, meaning VA and FHA loans. However, when you do that, it still has to run automated approval, sort of like on conventional loans, which are a lot of people do conventional loans. It's a minimum of a 620 credit score. But if I have to get an approval, so I always run an automated approval system. And if a lot of those people, unless there's 2 people on the loan or something like that, if it's below like 640, we have a hard time getting them approved. So a lot of times we'll have to flip them to a government loan. So credit is so important, and it's even becoming more important. Effective March 15th, we have a new it's called URLA, which is the application. So we have a new one that is now 9 pages, and the current one is only 4. So there's additional questions for borrowers. So so credit's becoming more and more important.
Yeah, absolutely. Credit, and it's not just the loan process. It's more than that. It's employment.
It's everything.
William, where are you seeing what's the strangest credit scenario you've seen in terms of qualifications for jobs and all types of stuff?
Oh, if people just need to be proactive because every place is checking the credit. Like you say, jobs, insurance. They're going to raise your insurance. Promotion on the job. That's why I had a big problem with general contractors and police officers come to me a lot because they can't get promoted. They got negative information on the credit report, and the general contractors can't get their license if they have a substandard score.
Right.
But I also wanted to add to what Diane was saying. Even at that threshold where you say there's 580 to 620 where people
Right.
get approved for them loans, they still, that where I come in is I definitely want to get these clients' credit score up to that 580 to that 620 for Diane. But say that if they come to you with a 620 and they're eligible to get the loan, after they get the loan, you still may want to send them over to me because that means that, that 620 still says that they have negative issues on their credit report that needs to be addressed. But,
Right.
secure the home, and then I can work with them thereafter.
Absolutely. Yeah. And a lot of times what we do is we'll try to improve the credit, and that's
Yes.
when we would send those to you, William. But, it's really important to pay attention to your credit, understand it, and William is great at explaining it. So education is the key on that. So it's definitely, most of the time when you have a 580 or a 620, you typically have something in your history that has not been rectified.
Yeah, life event. There's going to be a life event, a divorce, a bankruptcy, a job
it
layoff.
happens.
Those life events happen, and the sooner you can get that advice and look to, the experts that we provided, and you could reach out. Anything you heard on the show today, of course, reach out to the hotline 813-750-0550. Call or text the hotline 813-750-0550. And here's a neat niche for you as well. When you look at, sometimes you have folks that love a home. They're trying to get into the home. Credit's not there yet. They couldn't get the mortgage. We've got some programs where we have a particular investor that will actually purchase the property and lease it back, regardless of credit score, as long as they're putting a little bit of money in the game, down payment, skin in the game. As long as it has land involved, it's a real estate deal. So it could be a manufactured mobile home, concrete block home, whatever type of home, commercial building. If you have any scenarios like that, folks out there, we would love to help you. So, save that hotline number, 750-0550, call or text, and also consumerqb.com, consumerqb.com. Ray, anything to comment on what we were just talking about there? We've got about a minute left in this segment.
Credit's, a little bit removed from what my role is in the whole thing. For me, it's valuing the asset to see if that can. But, we were kind of touching on it earlier and about the difference between 2005 and now.
Yeah.
And one thing I've noticed is a lot of people aren't taking equity out of their houses now.
Interesting.
And that was a lot different back in 2005, 2006. And I think people went, a lot of people over leveraged themselves back in 2005, and that's why we got into that big mess.
Yep.
And, I think people are valuing their credit more. Yeah. And they're paying more attention to it, and they're realizing that, there's responsible borrowing and there's irresponsible.
Yeah.
And I like to think that we're going to be better off this time because people are looking at it a little more responsibly.
Exactly. Yeah. And then sometimes the kids saw the parents struggling, and they said, hey, I'm not going to do that same thing. We're going to be a little bit smart about the way we access our equity only when we need it, etc. Stay with us here on the Consumer Quarterback Show. Diane Vance, Ray Hall, William Crowley here on the Consumer Quarterback Show. We'll be right back after this short break. Please follow us online at Brandon Rhymes1 on Instagram and Twitter, Brandon Rhymes Realty on YouTube. Subscribe to our channel, and we'll be right back.
This is Chris Voss, former FBI lead hostage negotiator and owner of the Black Swan Group, and you're listening to Consumer Quarterback Show hosted by my friend Brandon Rhymes.